Good evening and welcome to tonight's live webinar where we look at the ASX investment opportunities in review for the 15th of June. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service based around our algorithm model portfolios, which include the ASX Top 20 model, the Top 50 and the Top 100. We also cover the US S&P 100. We have an ASX High Conviction and US High Conviction portfolio. We have a global ETF iShares model. And within the broking account, we can operate an independent portfolio where we work in partnership with you to execute ideas and strategies that we jointly agree on. We have access to derivatives to enhance portfolio returns using covered calls and other derivative strategies. If you'd like to know more about our broking account service, please contact 1300 614 002. Up on screens the 5-year average performance of the ASX 100 algorithm model, so taking all the buy-sell signals over the last 5 years within the ASX 100 delivered 13% return, and in Class B or the US S&P 100 strategy, approximately the same 12.89%. Please visit the Investor Signals website. We have a number of services. The research, which is the technology that I'm providing tonight, so that's a subscription to the Investor Signals member area. It's $1,320 for the year, and you get access to buy-sell recommendations, the algorithm models, and the charts and technology that I'll be displaying tonight. If you would like to know more details about the brokerage account, come to the home page, click on the read more, and we also have a managed fund as well. As I mentioned, the technology I'm presenting tonight, $1,320 for the year. At the end of that 12-month period, it then drops to $110 a month on a automatic debit on your credit card. But if you would like to sign up and start the access to the member technology, please give me a call or drop me an email. This is a very familiar table, so I won't spend too much time on it, but given the drop that we're starting to see in US equity markets, it's worth just pausing to look at what it is that the market's trying to process or digest around valuations at the moment. So for 2018 and 2019, average S&P earnings $160. The big question mark is, where do we sit for 2020? The challenge for the market's going to be the June quarter results, which begin roughly around the 10th of July. We saw all forward earnings guidance withdrawn from the market at the end of March. In another couple of weeks, we're going to start to see the reality hit equity markets of where that June quarter earnings. And now, to some extent, the market is prepared for the June quarter obviously be terrible, but when the actual numbers come through, how does the market? It'll be a real test for the resolve of the optimists. We're starting to see a slight pickup in coronavirus reported cases globally again, and is at the beginning of a more complicated second wave. Well, only time will tell on that front. But even in the absence of that, if we just recognize that during the good times earnings were $160, the market's pricing in 21 earnings to exceed 2019, and at the moment 22 earnings are about $180 of earnings per share. So in order for the US equity market to be back up at the highs where it is, we need this picture to be delivered, which is $170 to $180 of earnings per share. At the moment, we're starting to see the shorter term momentum indicators roll over, and I'll focus on that as a sort of backdrop to tonight's discussion on the markets. So the leading indicator we've been referencing is the Nasdaq. We've only had a couple of closes below the average. If we look throughout this rally since the 23rd of March, we've had a close under the average there for a day. Again here, at the beginning of May there, I think around the 5th of May, and then since then it's closed above that average the whole time. Now, the relevance of this average is really just a reference point for us identifying a shift in the momentum or a shift in the psychology, and we just want to watch over the coming period as to how much the momentum stays below the average. The sell-off from February to March, we never had a single day where the market closed back above the average. So we're just watching to see how it behaves as this what looks to be the early stage of a rollover in the Nasdaq. And with the valuation backdrop there that we looked at in the previous slide, there's every reason to be cautious, and that sort of sets the backdrop for the way we approach the market tonight. A new table's been added into the member area. It's called our trade table. As I go through the charts tonight, I'll speak briefly on certain stocks with regards to secondary or third level indicators. The trade table's designed for users or subscribers to the technology that are looking for shorter term momentum opportunities in the market. By definition, the algo model tends to take a longer term or at least a medium term investment approach to the market. The average holding time is somewhere between 3 months to maybe as much as 5 or 6 years as a stock that's held in the model portfolio. So for traders or investors that are looking for short duration time period positions in the market, the trade table starts to feed into a way of looking at the algorithm signals but filtering them from a shorter term trending perspective. And in last week's recording, we looked at a screenshot of the trade table where Coles was the only stock that was holding up, and on the short side I'd flagged ALU, COH and SEK as the three stocks where, so double red arrows would mean that the rules are met for a short trade, and double green arrows pointing up means the rules are met for a long trade. So I'll touch on that a bit further as I go into the presentation tonight. Looking at the US market, the Nasdaq up on screen here. So what we've done here is gone into the watch list. I have a watch list set up, select the Nasdaq, and what we're now looking at is the market's closing below this average, and we're seeing that reflected in a record number of stocks under sell conditions in the market. And if we have a look at the model portfolio, for example, whereas the top 20 would normally hold maybe 15 stocks, we're down to only 3 companies in the model portfolio out of the 20 potentials. So if you have access to the subscription, come in, have a look at the model portfolios to receive a notice as to when a stock's added or removed from the model. Just make sure that envelope's green rather than grey, and you'll get an email reminder, and that applies for all the models there. So back to the Nasdaq. The concern here is that we're now under a lower high structure. We've created a lower low, and are we in the early stages of this Nasdaq rolling over and building more momentum? And we could link up the fundamental story there, both on the earnings side and the upcoming struggle that the market may have as those June quarter earnings numbers come through. So with that in mind, we've built a fairly defensive position around portfolios at the moment. So some of the instruments, before I get into toggling through the stocks this evening, some of the instruments that we're using to hedge portfolios. So this is the US dollar beta shares. So we can see as the Aussie dollar's weakened, we've seen this do better over recent days. Another example of that, or really similar type trade, is the Yank. We've seen that trade from $12 up to $13 odd dollars. Other like the inverse ETFs that we've seen the bear starting to rally. The difference between the bear and the BBOS, the BBOS is a double inverse ETF, so meaning if the index falls by 1%, this goes up by 2%. So you can see this has rallied from $8 up to $9.50. The equivalent in the US is the BBUS. So we've seen the BBUS rally from sort of $2.50 up to $3. GDX, so rather than buying the ETF, we've really been focused on the local stocks, so Newcrest, Golden Roads, etc. But these are just, it's interesting when you look at this, very few instruments that are under buy signals. Everything I've shown you, in these last few charts, these are all under buy conditions at the moment. We'll look at sort of the individual stock levels, but that just gives you an idea of a few products there that are going up in value while the market goes down. Within the recent signals, if we go into the watch list here, come down, have a look at ASX recent signals. So this holds the last 7 days of algorithm signals. If we just organize these by buy, so again you can see that US dollar ETF there is under buy, gold's under buy. Bega Cheese came up today, so this is one of the first stocks that we've seen switch to buy conditions, and I'll make a post on the blog, and we'll begin a closer look at the fundamentals there and determine whether that's a stock we want to add. But at this point, with a downward pressure in the market, I don't think you need to move too quickly to be adding that into portfolios. GDX, which I touched on, ResMed, so we'll cover that tonight as we go through. The miners, which is global gold miners, that's something to think about in this environment. So you can move through those in your own time. The other list that you may want to come in and have a look at is the recent blog posts. This stores the last 30 days of blog posts. So again, we get that percentage gainers to the top, the buys there, and some of these we'll cover tonight as we go through the top 100. You can see there sort of so these are all stocks that have been tagged on the research or on the advice that I post on the blog. So each morning at 11 a.m. you're getting an email with stocks that we're focusing on tagged on the blog. And if you've got access to the member area, if you miss the blog for a few days, you can easily come in here and toggle through those charts and have a look at those. So tonight what I want to do is go through the top 100. We'll move through them fairly quickly, and we'll focus on the stocks that we see opportunities in the current market. So again, we'll get the percentage gains to the top. We'll switch it over to buy signals. So now what we're doing is working through this in an order of the best performing stock today that's under buy conditions. As we continue to move through the list, we'll get to a point where it switches from buy conditions into stocks under sell conditions. And what we're seeing at the moment is a similar pattern to the Nasdaq, where a large amount of companies are rolling over that are under sell conditions and now trading below their short-term average. TPG was a stock that we liked over the last few weeks. So we originally were buyers of it at around $7, spoke about it again at a pullback at around $8, and up at around $8.50 in this market. We think that sort of captures full value for the time being. But the earnings growth story for TPG is probably a little bit better than Telstra. But certainly if Telstra was back below $3, comfortable buying that ahead of the infrastructure spin-off that's likely to happen in about 18 months' time. APA Group, this is a stock that you can make a note of, and if you see this back at around 10.50 in a market sell-off, it is under buy conditions at around 10.50. Happy to look to accumulate that on weakness in the market. Dexus not doing there at the moment. Ansell just a little too expensive until we get visibility on the earnings, so again happy to have a look at it maybe on the next algorithm buy signal, but looking for a deeper pullback there. Newcrest, assuming that the market remains under pressure, volatility picks up and global equity markets move a little bit lower, we'd expect gold to do well in that environment. Newcrest looks to have found support sort of around that $28 level, and we continue to have a view that that's a safe place for money to be parked in portfolios at the moment. We'd probably be a seller of Newcrest on a rally up to around $33. Afterpay looks expensive to me. Happy to take a look at it on a more substantial pullback, get a bit more confidence there on the story with Tencent taking an equity stake there. ResMed, we got a target there at around $22, and we'll just see whether it trades down to that. But some of these healthcare stocks still look attractive in a market where earnings are going to struggle. NIB Holdings not doing it there in the healthcare stocks, or the health insurers I should say. CSL, the unknown here is what impact does the June quarter earnings have on CSL. Um, Dipping your toe in the water and taking some position size in CSL at the moment seems like a relatively low risk long trade in the market. But you have to be prepared for further downside here in CSL. The stock's priced to perfection. If they don't deliver double-digit earnings growth, I think you could see the market overreact, and we may see CSL down at lower levels, 265 or even 250. So I've created a pretty wide band there between, say, 240 and 275 as a buy range, and we just continue to watch it. At the moment, it's below the average, but you may think about it from a point of view of building some position size here and some at lower levels, or buying the stock here and then later buying call options, or vice versa. But we think CSL is one that you just want to keep sort of front of mind as we go through this sell-off in the market. Sonic Healthcare, great fundamentals here, and you want to look at buying this on a dip, but further downside. So we'd flag maybe around $25, $26 as an entry level there for Sonic Healthcare. QBE, not doing it there at the moment. I think the sort of insurers are a risky proposition. ASX, we really like this business. I'd highlighted that it was getting expensive. We'd taken profit on it in the high conviction portfolio, and we want to wait and see. It's certainly a pullback sub $80. We'd expect that to switch back to buy conditions, and it's one that would be comfortable adding into portfolios. Orica we don't mind, but obviously with the weakness in the market at the moment, you're seeing very few stocks hold up in a backdrop of global market equity selling at the moment. Orica, keep an eye on it, maybe back down sub $16, take another look at it. Westpac, avoiding the banks at the moment. Northern Star, preference Newcrest over Northern Star, but certainly comfortable with that. Illumina, whilst the momentum was carrying higher in the market, this was a stock that we're attracted to. I think you just got to be a little bit cautious at the moment. So we may see a retest of around 150 there. Fortescue, not doing there at the moment. Ramsay Healthcare, our view here is back at around $60 is a fair value, so keep an eye on this. We're at 60, say 3 at the moment. A pullback back to around that $60 level would be a good buying opportunity there. Santos, not doing there at the moment, but it is one. So when you think about Santos, Origin, Woodside Petroleum, Oil Search, Santos is the one that's still under buy conditions, probably has a better fundamental story to it as well. So I'll flag sort of the channel there. First stop on support, do we see Santos back at 450? And we'll continue to review that on the blog. Beach Energy, not doing there at the moment. Sydney Airports, flag support back there at around 550, and probably get a little bit cautious on that just with short-term momentum around the increase in concern around coronavirus infections picking up. JB Hi-Fi, always thought that was getting a bit expensive up where it is, maybe back at around $32 would take a look. And some of these levels that I'm flagging that are well below where the market's trading, what we'd expect to see is in the coming days or weeks, the algorithm engine begin to remind us that these stocks are creating a higher low formation or troughing within a larger uptrend, and at that point that's when we want to start thinking about adding them into portfolios. Flight Centre, not there at the moment, and then we've already switched to sell conditions. So when you think in the context of 100 stocks in the top 100, we've probably got something in the order of about 20 names that are under buy conditions, and the rest of the market's now under sell. So we'll continue through these, but the difference being is that we've now switched to where the most recent algorithm signal, which is the marker up the top here, is now under sell conditions. So Boral under sell at around $3-4, but as you know from prior recordings, I like the fundamental story among Boral, CIMIC and some of the other names tied into construction and infrastructure spending. Insurance Australia Group shifted to sell conditions there at $6.50, so just moving lower, so we're not doing too much there at the moment. Amcor got expensive up at $15. and we've seen that correct already from 15 down to 14. I don't expect the downside risk to be too great here in Amcor, so maybe around $13 in a soft market. Amcor starts to find some support. Crown, we think resistance up at around $11, not doing Spark. CIMIC Group, like the fundamental story here, it'll be interesting to see whether fundamentals or technicals win out, but at the moment the stock's certainly got lower low, lower high. We're seeing it close below the average. It has had a recent sell condition there, so you could be a bit more patient and just wait to see how the broader market trades before being too aggressive on the long side of CIMIC. Transurban got expensive up at around 15 and it's rolling over, pulling back below the average. Coles now under sell conditions, but we think Coles and Woolworths bump along sideways. We don't see any major downside risks to the story there. Reliance not doing there. Cube resistance up at around that $3 level. Xero resistance, but I think it's a good business. Xero, I don't think there's downside risks are too great there. Rio and BHP pulled back today following the weaker industrial numbers that came out of China. We'll have to wait and see whether more momentum builds on that softness in the resource names, but obviously it had been a leading area of strength for the market. Lendlease created resistance up there at around $14 and the stock's below the average short term. Unibail not doing there at the moment. Telstra under sell conditions, resistance there at around 330. I suspect that any weakness that sees it back below $3 would be a buying opportunity for Telstra. Brambles ran into resistance, not surprising, got expensive. In a stable economic environment, they're forecasting 5% earnings growth. I'd flagged it around 10.50. We may want to take a look at it. But again, until with that backdrop of the broader market, you just need to be a little bit cautious as to where we're heading on the earnings front. CBA had a bit of a breakout rally, a little bit of short covering there as we saw global banks rally, but those two have ran into resistance. And to give you an example there, Citigroup traded up to $60, now it's back at $49, so you've had a 20% correction from the recent high in Citigroup, and hard to see the Australian banks rallying if those global leading banks are struggling, and I suspect there's more issues yet to come for those global banks. Goodman Group, high quality business, but just getting a little bit expensive up where it is. We'll take a look at that on the next buy signal. And as we toggle through these, obviously these are under short signals, and you may have a short account or you may buy put options. If you don't, the focus of these stocks that are under short signals is thinking ahead of the quality names like Goodman Group, for example, that you want to be prepared for when it switches from sell conditions into buy conditions in the weeks and months ahead. Horizon resistance up at around $5. They're moving lower. We think that has some yield support, so maybe back down at around that sort of 425. We'd expect it to find support. Oz Minerals, high quality business here, and you want to take a look at this on the next algorithm buy signal, but resistance up there at around $10. Charter Hall not doing there at the moment. Seek, within the technology basket that we look at, I still sort of feel that maybe Seek carries a little more risk than, say, car sales, or although REA is looking expensive up at $100 a share at the moment, but Seek at around $20, I think up against resistance there. Computer share up at $14 is up against resistance, and expect sort of downside pressure there. Cochlear now under sell conditions and resistance at around $200. Maybe the PE is just getting a bit too much for the market to absorb there with Cochlear. AMP now under sell conditions at around that 170 level. Macquarie ran into sell conditions at around 123, so we always had a view that maybe 120 capped the upside there in Macquarie. BHP's now shift to sell conditions there, up at around $37. It's trading below the average. Coca-Cola under sell conditions now. Car sales up at around $17, running into resistance as I spoke about. REA up at $100 odd. I think that's just getting too expensive. So these are all candidates for the short side of the market. Evolution Mining, this has created a higher high If we see a pullback, maybe back down to around $5, you'd expect to see another buy signal occur. At the moment, Newcrest is under buy conditions and around that sort of $30. It's a stock that we're active in on the long side within the gold space, but just keep an eye on evolution and watch for the algorithm engine to turn positive there. The XTO, which is the top 100 index, is obviously under sell conditions. Woolworths shifted to sell conditions there at around $38. We've mostly taken profit in that, but again, we don't see the downside risk significant. So the other alternative here is just selling covered calls over it and driving the extra cash flow out of it. We think Woolworths mainly trades sideways. James Hardie up at around $27. Looks like it's up near resistance there and it's under pressure. Aurora ran in a resistance around $275. ALS not doing there at the moment. Iluka resistance at around that $9 level, and you can see there that it switched to sell conditions, or sorry, not switched, but had another confirmation of sell signals there. Ampol, which is the old Keltex business, now it's ran in a resistance around that $28 level and under sell conditions. AGL under sell. NAB, so within the banking stock, short ANZ, short NAB, maybe short CBA. We still think that there's further issues to play out for the Aussie banks, and we probably won't change our view on that until we feel that the global banking index or leaders such as Citigroup are on firmer footing. Tabcorp ran into resistance around that 350 level. Maybe as pubs and clubs reopen, sentiment-wise, Tabcorp could get a little bit of a boost, but largely the recovery that it's had from $2 to $3.50, I think, reflects that. We're not seeing great trends within the earnings picture there for Tabcorp. ANZ ran into resistance at around, so it's been under sell conditions from 27, hasn't had that recent algorithm sell signal like what we've seen in NAB, but nevertheless it's still under sell conditions and we see that moving lower. A2 Milk not doing there at the moment. Domino's not really doing too much there. Treasury Wines shifted to sell conditions or reaffirmed sell conditions there at around that sort of $11.70, $12 range. Not a stock that we're active in on the short side of it, but certainly you could think about it with stops back above that sort of $11.80 level. Cleanaway, so we like the fundamental story here. We'd taken profit on the stock up at around $2.20. This is a name that you just want to keep an eye on. If we see it back below, say $2, maybe $1.80, $1.90 level, we'd be looking to add that back into portfolios again. Origin, we like the longer term fundamentals here, but again, it's switched to sell conditions. It's now below the short term average. The momentum indicator's heading lower, so we're just avoiding these names in portfolios at present. Mirvac under sell conditions. Bank of Queensland now under sell conditions there. Resistance at around $7, but obviously these regionals have struggled for some time. BlueScope still running into resistance there at around $13. Stockland's back under sell conditions. Suncorp, so I've been highlighting the probability that Suncorp just hasn't provisioned enough for bad loans, and there'll be further write-downs yet to come. We've seen a pretty sharp sell-off after the short covering rally that pushed the banks from 9 to 11. We're almost back to where we started from there in Suncorp, back at $9, so a little bit concerned there to what the earnings trend looks like. GPT up against resistance just below that sort of 450 range. Woodside Petroleum under sell conditions and ran into resistance moving lower. Incitec Pivot, so don't mind the fundamentals here, but it is under sell conditions. We get some comfort with the capital raising. They did $600 million at the balance sheet's in good shape, but for the moment it's just been shifted lower in line with the broader selling across the market. Wesfarmers highlighted this was starting to get a bit expensive, up at around this $42 level, and it too's under sell conditions. Aristocrat under sell conditions, now trading below the average. Altium under sell conditions, trading below the average. Vicinity, same. So you can see that there's a big percentage of the market that's exhibiting sort of that same technical pattern of a lower high and now trading below the average, and that's why we continue to watch that Nasdaq as a leading indicator, and as long as the index is closing below that short-term average, we want to remain a bit cautious as we come into these June earnings results that get announced in early July. NEC, which is Nine Entertainment, again under sell conditions, closing below the average. Medibank under sell conditions. So when I say under sell conditions, again, it's a reference to whether the most recent marker up the is a sell signal up the top, or is it a green box down the bottom. So all of these last 50 or so stocks that we've moved through, the most recent signal is a sell signal, so meaning that it's making lower lows and lower highs. Oil search there at around $4. Whitehaven trending lower. Magellan Group, so interesting, it's rallied back up, created the lower high at around $60. It's under sell conditions, closing below the average. Worley, same thing there, lower high at around $10 and it's closed below the average. South 32, Downer EDI ran in a resistance at around $5.50, it's below the average. WiseTech at around $24 ran in a resistance. Star Entertainment, highlighted as both Star and Crown are getting a little bit expensive and a lot of good news priced into them. And then there we are back to TPG. So let's bring up a graph of the XJO and have a look at technically what's happening here in the market. So the concern is that the rebound back's been too much too soon. We're starting to see selling in the US major indices. The Nasdaq's below the average. The XJO's building a similar pattern. Therefore, in portfolios, you want to have some hedging through bear, BBUS, BBOS. You want to think about being short the Aussie dollar or long the US dollar as a portfolio hedge. You want to have gold exposure. You want to be in stocks that are defensive, so hence the reason why we're looking at TPG, North Star, CSL, ResMed, Newcrest Mining, and we're obviously cautious on financials, insurance companies, and have a large allocation to cash in portfolios at the moment, especially when you look at the models. They're allocated towards 50 to 75% cash, and then in our broader portfolios, having these instruments to try to profit from a downside pressure in the market. So you just need to be cautious coming into these earnings results, and I'll continue to keep you updated on the blog